Hello, my name is Falani Ogwili and I work with Hem Trading as the head of training. Now this is a short video to teach you about the stop loss order. Now I intend teaching you what a stop loss order is. Now a stop loss order is an order given to your broker to close or to unwind a position when the price moves against you. A stop loss order is designed to limit losses. I'm going to say that again. A stop loss order is an order given to your broker to close or to unwind a position when the market moves against you. It can also be said to be an order given to your broker so as to do what? To limit your loss. So what is the essence for a stop loss? The essence for a stop loss is actually to do what? To limit your loss. Now note, although it can also be used to lock in profit. So that means there's another function for the stop loss order, which is what? The locking in profit side of the stop loss order. But in this short video, I'm not going to be talking about the fact that a stop loss order could be used to lock in profit. I'm just going to talk about how that the stop loss order could be used to limit your losses. Now, it's important I say this also. Forex trading is a game of probabilities. Now, what do I mean? Forex trading is a game of probabilities, and losing is a part of the game. So that means when you take some trades, you could expect that not all will be profitable, but some could just be a losing trade. Yeah, it happens. So that means there's a need for a stop loss in every trade that you take. If I'm to advise you, I would say never trade without a stop loss. A stop loss could also be said to be more like your insurance policy. Now let's move on. As a forex trader, your job is to speculate the future rate of a particular currency pair. Now for example, this is the pound US dollar pair, and this is the current market rate on this chart. You can see 1.6810. that's the current market price. 1.6810, and that's the current market price. And as a forex trader, your job is to speculate the future rate of a particular currency pair. Now this is the pound dollar pair, like I said. Now if you believe or if you think that the pound dollar pair would rise in value, rise means it's going to move higher. If you believe that the pound dollar pair is going to rise in value, you have to do what? You have to place a buy. And on the other way around, if you expect that the pound dollar pair is going to what? Fall, that means you expect the pound to fall against the dollar, you have to do what? To place a sell. Yeah, that's how it goes. You have to place a sell. But then you need to understand that if you place a buy, that means you expect the price to rise, but you might be wrong. And what if it does not rise and it begins to drop? That's the need for a stop loss. You need to put a stop loss to limit your loss in case you're wrong. So I'm going to do an example here to show you how we do it. Now watch, there's a pound dollar pair, and I'm going to place an example here for what? For a buy example. So this is how we do it. To place a buy, the current market price is 1.6811, and I'll place a buy right away. If I place a buy, look at it, this is how it goes. That is it, successful. That means I'm in the trade now, successful. Now this is my entry price, and I expect the price to do what? To rise up. Now what if price does not go up and it begins to come down, losing money? So that means my stop loss will be below. Now note, in a buy trade, your stop loss will always be below your entry, but in a sell position, your stop loss will always be above your entry. So this is a buy trade, and my stop loss will be below my entry. Now you bring your cursor on the entry price, on the entry this way, and it says drag to modify. Then you click on it and you hold, then you drag downwards. If I drop it around this area and I leave, that means then I'll click, it says modify, I'll say yes and I agree. I click modify, it says okay. That means I've been able to fix the stop loss on this trade. I've given my broker this trade. That means I am buying the pound dollar, expecting that the pound should rise against the dollar. But in case I am wrong, what it means that the moment price pulls down, saying no to me, pulls down and hits this red line, I want you to limit my loss, because obviously I'm losing money. That is that's an example for the stop loss for a buy example. I hope you got that simple analysis. Thank you.